Hey everyone, my name is Michael here from Lux Trading. Today, I want to talk a little bit about how I personally look for the right stock to trade. So how do I configure my scanners and what steps do I normally take to complete my watch list? First and foremost, I want to talk a little bit about the reason why I prefer trading small caps. We all know that there's a lot of high frequency trading algorithms in the markets. And when I look at large caps, I think of institutions, financial institutions, funds, hedge funds, etc. We all know that they mainly use high frequency algorithms to operate in the market. And these algorithms, they're created by some of the smartest people in the financial industry. So therefore, when you think that they have to allocate billions of dollars on a daily basis, it's very hard for us as retail traders to compete with that. For me personally, I've seen that it makes it very hard for myself. So this is one of the main reasons why I prefer going into a part of the market where I will see less high frequency traders and I will see more retail, right? There's more reasons, obviously, but that's one of the big reasons why I choose small caps. So having said that, every day, the first thing I do is check my top gap scanners. So what is a gap? A gap is a stock that has closed at X price previous day and has gapped up since then an X percent. Now, in small caps, it's very common to see 30, 40, 60, 80% gappers. It can go even to 300, 400. It's not uncommon. So, I'm looking at the top 5. I don't want to have like a huge watch list. I want to have maybe 5 or 6 stocks that I'm going to be watching on the day. So when I see which of the 5 top gappers, then I go into price range. So there's gappers, price range, relative volume, float, and then catalyst, the news, the reason. Once I got my gappers, I'll see the price range. So the price range, I like to trade nothing below $1 and nothing over $20. So I'll put the range between 1 and 20. My sweet spot that I like to trade, that I do really, really well, is between $6 to $12, $13. That's the range where historically, when I look at my trades from the past, and I kind of see that I do pretty well on that stock price. The price action is, just for me, it's cleaner. And then I go into the relative volume, right? I definitely want to see an interest in this stock. So I want to see 2, 3, 4 times the average volume traded. It's important to make sure that there's an attention, that the market has its eyes on that stock for you to be able to even think about going to technical analysis, right? So once we got the price range, we know it's a top gapper, we have relative volume, so that's all checking the box, and we'll go into the float. So the float is the amount of shares available to trade in the open market. It's all about supply and demand. If you have little supply and you have a lot of demand, that's when you get those opportunities. You can have a huge surge in that ticker. I don't like to trade anything over 20 million shares. So I will put anything under 20 million, and the smaller the float, the better. Many times I see floats of 4, 5, 6, 7 million shares, and that's exactly what I'm looking for. Okay, so it's all, like I said, the smaller the supply, the better. Because if it has, what's the next point? The catalyst, which is the news. If it has a good news, then that's when you can see huge moves. Now, the catalyst, it's important to understand what to identify, because not every catalyst is going to make a move in the market. So it could have basically great news, but maybe the float is too high, or there's not that much relative volume, or the price is too big. So, that's how accordingly I will kind of see which one has more of my interest. One of the sectors that I prefer trading is healthcare, and it's FDA approvals. I've noticed since, the last 3, 4, 5 years that when you get these FDA approvals of some kind of medicine has been approved, or phase 1 of some kind of trial has gone to phase 2, you will see a lot of surge, a lot of volume come in. So these are the top 5 criteria that I will configure. And then after it all checks the boxes, I'll have hopefully a handful of stocks that I'm going to be looking at. And that's when I open my technical analysis charts to see exactly if the charts are clean. I'll look into the daily, the weekly charts, see if there's a lot of upside resistance, if there's maybe a lot of bag holders. So it's all very important to identify the volume, how it's been spread up in pre-market charts. Was it only one candle that had the whole volume and then it came back down? So all these things are really important to identify so you can actually decide if it's going to go into your watch list or not. I personally like to have 5 or 6 stocks that I'm going to look at, and I'll put them in one of my screens, but then I'm going to be focused with no more than 2 tickers in the open. I'm going to have a trading plan for those 2, and then depending on the open, on the price action, it's where I'm going to execute a trade or not. If my scanners don't look good, if I don't have conviction in any of the tickers that I'm looking at, maybe they do have the right float, the relative volume, maybe they do have news, but then when you look at the charts, they're not clean. So it's something that, I will definitely consider. Then maybe that day is going to be a no trading day. So it's important to identify all these things. This is just a little bit of how I tend to look for my stocks every single day. I just rinse and repeat, and it has worked so far. And that's kind of it. I hope that this video can help some of you that are trading small caps, that maybe you don't know how to configure your scanners. This is how I personally do it. You need to also kind of tailor it for the way that you like to trade yourself. And I hope you've enjoyed it. I will create some more content in strategies, risk management, and a lot more. So I hope you enjoyed. I look forward to seeing you all soon. Take care and have a good one.